Hello, everyone. My name is Ian McCracken, and I am so happy to be here with you. We're going to discuss some basics of business. I own several businesses. I have a executive recruiting firm that I started 20 years ago. I also run a consulting firm. I have a restaurant, and I also run a global children's foundation. And today we're going to talk about some basic business terms. Some of those terms include revenue, includes the terms of expense. We're going to talk about variable costs. We're going to talk about fixed costs. We're going to talk about ROI, which stands for return on investment. And we're going to talk about net profit, not all in that same order. But let's go ahead and start. So first and foremost, what is revenue versus expenses? So we hear that all the time. So revenue, it describes the income earned through the provision of a business's primary goods or services. That's revenue. And expense is a cost that is incurred in the process of producing or offering a primary business operation. So that kind of sort of sounds fancy. I'm going to share with you, in essence, the real basic overview of revenue versus expenses. Okay. So let's say I own a company that sells pens. Okay, just super simple pens. And I purchase 5 pens. So I have 5 pens right here for $1. Okay. So I purchased 5 pens for $1, but I sell the pens for $1 each. So although I bought 5 pens for $1, I'm selling each pen for $1. And so when I'm done selling the pens, if I sell 5 pens at $1 a piece, I'm going to have $5. Okay. So the cost that I incurred in running my pen business was $1 for 1 pen. The revenue that I received for selling all 5 pens is $5. Okay. The net profit is revenue, $5, less expense, $1. That would be net profit of $4. So there are your three terms so far. You have revenue, what you earn, gross revenue. I just added a word, gross revenue. That's all of your revenue, less your cost, in this simple example of $1, equals your net profit of $4. Okay. So I'm hoping that makes sense to you. Now let's talk about that fancy term, return on investment. Okay. So most people will say ROI, return on investment. Okay. And what ROI does is it describes income earned through the provision of a business's primary goods or services. Okay. Remember, an expense is a cost that's incurred in the process of producing or offering a primary business operation. We remember our pen example, right? So ROI, the return on investment, is a calculation of the monetary value of an investment versus the cost. How do you calculate ROI? All right, the most common way is net income. So remember I said net profit, same thing, net income, divided by the total cost of the investment, okay, the $1 in this example, in other words, ROI equals net income divided by cost of investment, and then the trick is to multiply it by 100. So in our example, our net income, our net profit was $4 divided by the cost of the investment, the $1. So $4 divided by 1. This is a simple example. It's 4 times 100. So our return on investment in that pen example is 400%, right? So net income, $4 divided by the investment of $1 times 100. That's how you calculate ROI, that percentage. Okay. Now, obviously, my examples are super, super simple. No business is that easy or simple, right? However, there are other things that go with businesses. For instance, variable cost. You've heard that term perhaps, and fixed cost. So a variable cost is any short-term expense that changes based upon how much a company produces and sells. So examples of variable costs would be sales commissions, as an example, or raw materials cost, or credit card interest, or utility bills. Okay. Variable costs can be adjusted quickly. So if I don't like my utility bill, I can change it, or I can stop using my lights as much, or my electricity as much, or my air conditioning as much, or my water as much, and my utility bills will fluctuate. That's a variable cost. It's not a fixed cost, something that's always the same. So I kind of gave that away. A fixed cost, what is it? It is something that is a business expense, expenses that are reoccurring and not based on level of good or services produced by the business. So other words for fixed cost can be overhead cost or indirect cost, and examples can be, for instance, rent. So I mentioned to you, I own a restaurant. I own the restaurant, but I don't own the building in which I have my food. Okay. And so I pay a landlord rent, and I pay the same amount of money every single month to that landlord. That is a fixed cost. Other fixed costs may include salaries. They can be loan repayments. So maybe I buy some signs, and if signs cost $20,000 and I pay $5,000 back per month for 4 months, I have fixed cost of $5,000. Until 4 months is over, my $20,000 is gone. Okay, fixed cost. Advertising is another example of a fixed cost. Okay, so we've gone through Business 101 on things such as revenue. We've talked about expenses. We've talked about variable costs. We've talked about fixed costs. We've talked about net income or net profit. We've talked about return on investment, ROI. These are the basics of when you're starting up and learning about a business. I hope it's been helpful to you. I will be talking to you some more on other things. And thank you so very much. All righty. Talk again soon.